Colorado.
All right, I'd like to welcome everybody in, get a little background banter as we're starting to kick off here and seeing our attendees start to filter in. I want to welcome everybody. I'm Tom Galucci with the Mortgage Collaborative. Got a pair of esteemed discussion leaders for today's session on TMC Connect titled Achieving Affordable Home Ownership. Reality, more homes equals more homeowners. Not a difficult equation to surmise, but how you get there is quite the can be quite the quandary. So we'll kind of dive a little bit more into that today. Before we get started and introduce our discussion leaders, just going to go through some quick housekeeping items for our discussion. Whether you've dialed in or you connected via your computer, all lines have been muted. And that's done only to avoid any background noise in your area and just ensure that everybody can hear today's presentation clearly. That said, want our discussions to be as interactive as possible. So feel free to submit any questions, any comments that you've got through either the chat or the Q&A buttons, both of which are accessible at the bottom of your Zoom screen. And I'll be able to go ahead and verbalize those with our discussion leaders on your behalf. And even on the comment side, if you want to shout out where you're joining us from, or any fun anecdotes that you're hearing here, the more the merrier in our comments feed. And then as a reminder, today's discussion is being recorded and will be available for playback. So instructions to access copy will be accessible in a follow-up email that you'll receive tomorrow, as well as we'll have a copy of the presentation deck displayed throughout today's discussion. On that note, go ahead and jump right in. So leading today's discussion from our longtime partners at ArchMI, we have Vice President of Government Industry Relations, Kirk Willison. Hey, Kirk, how are you?
Great, Tom. Great to be here. Thank you.
Always great to have you on board with us. And then also leading today's discussion from the National Community Reinvestment Coalition, we have Chief Community Development Officer Ed Gorman. Hey, Ed.
Hey, Tom, how are you?
I'm doing well.
Good.
Great to have you with us today as well.
Here, thank you. Nice to be with you.
Excellent. So, appreciate you guys taking the time out of your busy schedules to lead, and I'll stop rambling and allow us to get into the meat and potatoes today. So I'll turn it over to Kirk to kick things off, and then I will delicately try to interrupt if I get some good questions coming in through the chat.
Sounds good.
Well, thank you, Tom. And I want to thank the Mortgage Collaborative for inviting Ed and me to present to you today. It's about a topic that we think is critical to the future of our nation's well-being. We've both spent much of our professional lives working to improve opportunities for affordable home ownership. Me in a variety of policy roles in the primary, secondary, and now the mortgage insurance markets. Ed's history in affordable housing is even more extensive and really much more hands-on. In a couple of words, Ed's a builder and a developer. As Tom mentioned, he's now Chief Community Development Officer for the National Community Reinvestment Coalition, NCRC, in Washington, where he heads the organization's efforts to build homes for low and moderate income families under the banner Growth by NCRC. It's a for-profit arm of NCRC, so Ed can read a P&L sheet and he faces the same hurdles as any home builder in America does. Ed and I had the good fortune to work side by side for about a year while launching the Affordable Homeownership Coalition. That's an alliance of lenders and home builders and realtors, community and civil rights groups that have been dedicated to improving credit access to home loans, but also increasing the supply of homes in America. We'd love your participation in the AHC, and we can talk about that a bit later. Our timing for the Affordable Homeownership Coalition really couldn't have been more prescient. There's certainly never been a time in my tenure in the home lending industry where there's been such bipartisan agreement on the issue of needing more homes. A few years back, for instance, moderate Democrats in the House of Representatives, so-called New Democrats, they published a report called Missing Millions of Homes. And it urged that local, state, federal policymakers all work together to find a way to cooperatively create more homes, increase the stock of housing for Americans. Even before the Trump administration left office, I think it was actually the last day they were in office, HUD published its long-awaited report about a year in the making that took a look into how best to eliminate regulatory barriers to affordable housing. Now, the Biden administration has introduced an infrastructure package, and it contains $200 billion targeted toward housing. Now, while most of these funds would be going toward constructing or improving rental properties for low and very low income families, there is funding, about $20 billion worth, for rehabbing old housing stock and building new homes to grow home ownership. Now, you've probably already heard and or know about the enormous racial home ownership gap. And if you haven't heard the statistics, we're going to tell you a bit those later on today. But here's a few other figures that you might not be aware of. Consumption and investment in the US would soar by $2 to $3 trillion if we close the racial wealth gap. And that's according to McKinsey and Company. And the wealth gap, the most important characteristic is home ownership. That closing the racial wealth gap, McKinsey says, would put $6,000 to $8,500 in everybody's wallet. So closing this gap doesn't just help minorities. Closing the equity gap helps all of us. Citibank itself concluded that if we had closed the racial equity gap 2 decades ago, an additional 770,000 African Americans would be homeowners. You know, combined expenditures on that would have pumped another $218 billion into the economy. That's money that your company and my company could have made that we've actually just lost out on, and essentially we've lost that forever, and now we're just trying to play catch up going in the future. In short, if we can work together to solve the minority homeownership challenge, lenders and mortgage insurers and community home builders, we're going to be a much more vibrant contributor to the economy. We're going to have more business than what we know to do with. I mentioned Ed is a builder and a developer. I think he's also a visionary, and he thinks big, and never quite as big as what he's here to advocate for today. And that's a housing moonshot. So Ed, I'm going to turn it over to you, and then I'm going to start sharing your presentation.
Well, thank you, Kirk. Thanks for the introduction, and I think you framed the issues very well. I think the issue we face here is really, is no less important than the preservation of what we all think of as the American dream. I think for folks who come to this country, in whatever way, in whatever form they come in part because they believe in the dream that they can build wealth and raise their families, and that a home to them, long-term plan for their family's success. And that's no less true of the people already here who want to buy a home. And we know from previous surveys being done on the subject that in spite of what folks may have thought about the millennial generation, they are at least as interested in buying and owning a home as previous generations were. It's well above 90%. But the problem, of course, is they're not there. And so we're going to talk a little bit about the why of that and what we need to do about it. The title of this presentation, the moonshot, homeownership moonshot, really refers to is this. We have had a shortfall in home building of any kind that's lasted since the Great Recession. And whether you believe Freddie Mac's estimate of roughly 4 million, or you believe the home builder's estimate of 6 million, let's just pick the midpoint and call it 5 million homes in deficit today that should have been built just in the last decade plus. So if you would, Kirk, I'm not sure quite how this works, but go to the second shot. So So here's our, no, I'm sorry. Prior page, if you don't mind.
All right, let's,
The one with Kennedy on the cover.
yeah, let's see if we can get this going here.
All right. So here's the sense we have of this. Once upon a time, we did big things in this country, but it's been a while since we have. And interestingly enough, we just did a big thing. We developed a vaccine in record time to inoculate the public. And of course, it feels as though it was too long. But of course, in the history of vaccine development, it was the fastest ever created. Now the question is, can we do for the generations that would like to be homeowners the same kind of thing that we've done, although it'll take longer, clearly, and it'll take far more than just what happened in 1961 when Kennedy developed the moonshot challenge. He was able to galvanize public interest and the federal government behind the effort to put a man on the moon before the end of the decade. Well, we think that it's time to use the same thinking, the same large thinking about how to really make up the deficit as it applies to home ownership. The supply is miserable. And I speak as someone who literally in the last 2 weeks sold my own home. On the market, 2 days. 22 people in a weekend without even an open house. And on the Monday following the Saturday listing, 4 offers, all over asking, competing with each other. And mine is I live in Silver Spring. It's not a well-to-do part of Montgomery County, Maryland. It's diverse, which I love, but it's not particularly, and Glover Park, some of you may have seen the article in the Wall Street Journal, 76 offers on a house that went on the market. It was a fixer-upper, and it was listed for $275, had 76 offers, all but 19 were all cash, and the final sale price was $440,000, less than a week after they put it on the market. It's these kinds of imbalances in the market that make it impossible for working class people to own a home. They can't compete. They don't have the all cash capability. They can't waive inspections, and they're having to do it anyway. We're waiving appraisals and hoping that they can afford it. The fact is that when folks find homeownership out of reach, they become disengaged, disenfranchised, and otherwise not connected to the America that we all grew up knowing, at least in my generation. So our thought here is it's time to reconsider how we view homeownership and re-engage and reinvest. And that it's not okay to have a Black homeownership rate of 44%, which is the lowest since the civil rights era, or a Latino homeownership rate of 49%, when whites are at 74%. So what do we think we need to do? Here's the summary. We think we need to build 20 million homes next decade. On average, we should be building 1.2 a year anyway. We're 5 million behind. You can do the math on that. That gets you to 17. If you want to bring Black and brown home ownership rates up to 60%, just 60%, we estimate you're going to need at least another 1.5 million homes built. So you see where we are. It's the kind of big proposal that once upon a time galvanized this country. And, just for a little bit of history on this, let's go to the next slide, please.
Okay. Get this.
So, sure. I was going to go back to World War II and whoa.
Goodness,
Okay, so we'll get oriented.
So much slide.
I know. So look, coming out of World War II, the country understood that there were a lot of returning veterans and they didn't have housing. And so we passed the GI Bill. And the GI Bill was great for those that participated. And in fact, Black home ownership rates rose significantly in the period following the enactment of the GI Bill. But we're talking about going from 19 to 38%. And it wasn't until we passed the Civil Rights Act and the Fair Housing Act that it went up further. But we did a couple of things really well. So we had low down payment. We had VA loans at 1%. We had the GI Bill to help folks with both their education and financing housing. And then in the mid-50s, we passed the Federal Highway Act. And so we created the infrastructure to get people to the homes that could be built in the suburbs. And since then, we really haven't emphasized home ownership. And in many ways, we've had the mortgage interest deduction. Everybody understands that. And most people thought that was a critical underpinning to housing and home ownership. But as a policy of the United States, we have not seen a home ownership policy. No, Bill Clinton had a home ownership policy to increase home ownership. So did George Bush II. And there were concomitant rises in home ownership rates during their presidencies. But an overt home ownership proposal that builds infrastructure to meet the needs of builders. The home builders estimate it costs $85,000 to put a shovel in the ground. I know that that's largely true. Now that's across all housing, not all priced housing. But consider what we could do if we made it easier to build. And in this respect, I'm a community guy. And so when Kirk talks about the American Home Ownership Coalition that we formed 3 years ago, what we did was essentially recognize that left and right agree on about 90% of the issue here. That we've got that focusing on access to credit and capital is not going to get the job done. If you don't create more inventory, you're simply not touching the problem. So let me go to the next slide, please. We believe home ownership is infrastructure, and I'm really glad to see that the Biden administration is now agreeing with that. We've called for that, and we're glad that they're listening on that issue, because it clearly is. Now, there's some folks on one side of the aisle, I won't say which one, who challenge that, but I honestly think, yes, you got bridges, you got tunnels, you got roads. But if housing isn't a critical leg and the three-legged stool that supports families as they grow, I don't know what is. It's income, it's housing, and it's health. Those three things. Without housing, without affordable housing, people can't live a stable life. They can't build wealth. And we know from experience that over 80% of Americans build wealth this way, through home ownership. So I know I'm preaching to the choir here because folks who do mortgages understand this. We've got to get that word out and get people to understand that being in support of building more homes, because we're not going to renovate our way out of this. There's just not enough inventory. I mean, I'm glad that they're focusing on a renovation element in the infrastructure bill, but the truth is they're going to find what we know. We go out there, our fund, and we buy in low and moderate income census tracts, and we build in low and moderate income census tracts, or to benefit low and moderate income buyers in any census tract. That's our entire reason for being. We can't find the inventory, so we're having to build our way out of it. And the opportunities are there. Finding builders who will build affordably is a challenge. Let's move on, because I'm covering a bunch of things that are probably covered better in some of this other stuff. So we see it in two ways. You've got a preservation side that Kirk will talk about here, and then you've got new construction. And both of these things really need to be focused on in order for us to get out of the mess we're in. Kirk, why don't you talk about preservation side?
So on the preservation side, it is interesting. The administration has gotten behind what is called the Neighborhood Homes Investment Act. And this is something that they would set aside about $20 billion for. It would be limited to people who earn no more than about 120% of the area median income or that particular neighborhood community income. And the funds would be going toward targeted first-time home builders or home buyers so that they can begin to take older stock of homes, renovate those. Now, the beauty about this is a tax credit program. It's modeled under or after the low income housing tax credit, which is used for multifamily purposes. But in this case, a builder or a developer could come in, they could rehab a house, and they could sell the house. Now, if they end up selling the house below what it costs to buy and to rehabilitate it, that's where the tax credit comes in. And the tax credit could be used to make up that difference between what the actual cost of it was and what it could be sold for, because there will be limits on how much those homes can be sold depending on the particular neighborhood that they're in. The idea is, again, let's carefully target home ownership here toward either first generational home buyers or first time home buyers. And there's a couple other efforts that are being made on the demand side, and we can talk about those later on, but you probably are familiar with the Biden tax credit concept. And more recently, there's been a new plan out there that would give first generational home buyers funds for either a down payment or to pay closing costs, or maybe to buy down an interest rate. So a number of these things, but by carefully targeting them toward first generational or first time home buyers, they hope that it won't spur demand so much that it will just send home prices soaring, because that's the struggle we're in right now. Is demand right now, as Ed talked in his own personal experience, far outweighs supply. We don't want to do anything that's going to make it even worse and make it even harder for low and moderate income people to get into.
Well, and Kirk, it's funny you mentioned that. It's kind of a question that bubbled up to me right away when you kind of laid out some of the info related to the tax credit towards particularly like LMI, census tracts, and being able to cover some of the down payment items or additional funding. And I would imagine soaring home prices can quickly kind of throw that equation out of whack too. Fair assessment?
I think Ed can speak to that for the customers that he's trying to put into homes.
Yeah, I mean, you're right, Tom. There is a conundrum here that you face when you say, oh, let's build 20 million homes. We have a high cost of lumber to begin with. What's that going to do to lumber costs? We've got shortfall of labor. What's that going to do to labor costs? I mean, but folks who raise those questions, and I don't, with no disrespect intended, generally don't have an alternative. I mean, the alternative is not to sit, and accept the status quo, because if you do, the housing market is already so far out of whack. The inventory is already so low, and the interest rates are so low that the combination is causing home prices to rise precipitously just in the last few months. I mean, but for the demand, you would think we were approaching a bubble, because this is the kind of behavior we saw in the market in 2006, 2007. And so how is this not like that? Well, the underwriting has changed, as everybody who knows mortgages understands. The risk profiles have changed. The demand is higher than it's ever been. And let's understand too, in terms of family formation and demographics, the crest of the millennial wave has not even hit the peak first-time homebuyer age of 31, which we traditionally see in the market. So if the demand already looks like this before that crest has occurred, can you imagine what will happen once it does? So, there's only really, in my view, I'm delighted that we are treating housing as infrastructure. I'm delighted that we've set aside, it looks like enough money to do about 500,000 homes for low and middle class home buyers that are in the renovation category. And there are some cities that will really benefit from that. Places like Baltimore, Detroit, maybe some parts of Chicago, et cetera. But there are the inventory starved markets already out there. And those aren't going to help much because you're not going to find the houses to apply the renovation dollars to. So it's going to be a market by market kind of shift. I think the real bottom line here is we have to build our way out of this. And you can raise these other issues, and rightfully should. I do think lumber prices are going to head back down. And I see somebody asking about hempwood. Yeah, absolutely. And by the way, if you want to get Republican support for home building, talk about alternative products and sources like hemp. You'll get Mitch McConnell on board in a hurry because Kentucky's one of the biggest hemp producing states in the country. I mean, so those are all thoughtful things. We also have to think about carbon neutral building, new technology to bring to bear on the housing side. And all of this stuff can only happen if you essentially first call for a big, hairy, audacious idea. And if you don't, it won't happen. But people will be forced to innovate when you do. And I think looking at things like manufactured and modular housing, which in many ways is a truer form of development, looking at 3D printing, small now, maybe it takes hold. We don't know. This industry is very, very hard to change. Anybody
Yeah.
who knows construction knows that.
I mean, actually, I had another quick question come in just asking, like, how can we get more affordable housing builds for first time and LMI borrower footprints outside of building more tiny homes?
So, so if there are some markets where you can build normal sized homes, the Southeast particularly, and the South, the pricing is still such. I mean, we're about to start in partnership with the mayor of Birmingham, building 24 units. Will be announced next week. And it's the first of 3 phases. We can build and make, we don't have to make a lot of money. We have to make 10%. And if we do that, we can build in places like Birmingham. But you're right. We're going to have to do things like tiny homes, auxiliary dwelling units. You also have density problems you have to tackle. And so this isn't just a federal mandated change issue. I mean, you can provide carrots, maybe some sticks, and you can try to get the incentives aligned. But there's also going to have to be local citizenry that say it's no longer acceptable that single family residential zoning has parking requirements when we don't use cars nearly the way we did. Or has minimum, acreage requirements when you can build vertically, and maybe, you don't have to have setbacks that are quite as big. There are ways to do it. You also have to think about things like fast tracking affordable home building, meaning permitting processes. Those delays are, as anybody who builds knows, are killers. I mean, we've been waiting a year for permits in Fulton County to build 46 homes. It kills you. What was a profitable project. Now, what's saving us, frankly, on that is speculative rises in costs. I mean, in home prices. But the truth is, we don't want that in our markets. We can't rely on that going forward because, as Kirk was saying, these are unsustainable increases over time. So, Kirk, I don't know if you want to comment further on that.
Well, and the other thing, Tom, I think is particularly frustrating is that this isn't an issue that everyone can agree on politically, even within the same party. I was just reading the other day while the Biden administration is putting together funds that will try to encourage cities to lower these restrictions, lower these barriers, the land use barriers to building more. The Secretary of HUD, Marcia Fudge, she's a former mayor, and she says she's very reluctant to take money away from cities that aren't willing to make these type of changes. So even within the same party, there's disagreements that are going to make these really tough, and it's going to take the efforts of lenders like you guys are, and others in the stream of mortgage finance to try to persuade policymakers at the local, state, and federal levels to make these type of changes.
Kirk, I want to pick up on that for a minute. I think in many cases, historically, folks who are on the finance side don't generally think of themselves as advocates for home building in a sense. I mean, they, in some ways, they've got enough trouble trying to figure out how to align the underwriting requirements so that they fit. But I've got to believe that anybody in this marketplace is looking at an end to the refinancing era and wondering where the mortgages are going to come from. Well, if inventory remains where it is, and I humbly suggest you need to be advocating for more building, and you need to align yourself with groups locally that indicate they want to do it. There's YIMBY, Yes in My Backyard in California. There's Neighbors for More Neighbors in Minneapolis, where they, a social media driven group, millennials got together and basically forced a rescinding of the single family zoning ordinance in the city of Minneapolis in a year. Completely torched it because they realized they couldn't reform it. I think you're going to see more of this kind of thing. And so I think it behooves us to get ahead of this. I think it also makes good sense to make common cause with folks that are otherwise thought of as strange bedfellows. If you have a group that does community advocacy in your region, they might be a good candidate to hook up with to help them get over the finish line on the work they're trying to do. And I don't think it's okay. I think sitting on the sidelines is going to get you more of what you got now, an upside down market. So look, I mean, Urban Institute, here's a good stat. Don't know what happened there, but the Urban Institute is projecting a 3% drop in the overall home ownership rate if we continue doing what we're doing now. And we're already at relatively low home ownership rate. I think it's right about 65%. We were up closer to 70 during the Clinton and Bush 2 eras, but whatever you think of it, you don't want to see it drop. And I'm sure folks on the phone don't want to see it drop. And the real problem is the social inequity for Black owners, particularly. You're going to see a 9% drop between boomers and Black millennials. That's the wrong direction for this country to be going, in my view. Anyway, next one. So we talked about the home ownership rates. I think folks know that people of color are spending disproportionately on housing, well over the 30% mark that most people recommend. Let's go to the next one.
Sure.
Yeah, so I think the other thing to think about here, and it's hard to think long-term when you're in a day-to-day business, right? And folks in the mortgage side are thinking day-to-day, or week to week, month to month. But think long-term. What is the impact of a decline in home ownership rates, particularly for communities of color, which represent about 85% of the expected growth among homeowners in the next 10, 15 years, according to Harvard Center. So it's from our, it just strikes me as bad business and bad for business. So, if you want a society that's susceptible to the kinds of polarization and division we've seen in the last 4 years, continue doing what you're doing. So anyway, let's move on. These are the issues we see that are the challenge.
Walk through them here.
And all of let's start with labor. We lost a huge segment of the workforce during the Great Recession. It was a depression for the construction industry. It wasn't a recession. And we lost 645,000 people just in construction alone. And then a lot of folks who were immigrant labor, whatever your position is on immigration, the fact is that was a critical part of the economy, particularly for home building. And we
can't immediately make up those with, new high school graduates. They're not just going to suddenly, they don't, first of all, want to be in the construction fields.
Well, that's an important point, Kirk. Before I did what I'm doing now at NCRC, I ran a national organization focused on workforce development. And 80% of what I did was involved in construction. And so we did pre-apprenticeship programs in 40 cities and states, and primarily worked with public housing authorities because that's where the people are. And built pre-apprenticeship programs and put thousands of people through it. and we still came up short. You know, it's tough work. It's good work. It's important work, workforce development, pre-apprenticeship training. But the numbers we're talking about here aren't going to be done by that on that basis alone. Also, the industry has a problem, right? Construction, big problem. An image problem. People don't want to get their hands dirty. You know, people even working in construction don't want their kids doing it because they think it's somehow, you know, but we haven't made it attractive for people to be in this industry. We haven't told people that it's a good, honest trade that can make you, you know, six figures. Particularly if
Yeah.
I mean, if you're an HVAC technician, a plumber, electrician, you're going to make six figures easily.
Right. And we've spent what, 2 generations now wholly focused on you've got to have a 4-year bachelor's degree or you can't,
Yes,
have a career of value and financial worth.
exactly. And how many people, what percentage of people make it through college? Anybody have a guess?
25% at best.
25. 25%. So what does that say for the other 75% of the people who don't? What are we doing for those folks? So, I mean, there's a lot of, and I've got a particular workshop at our upcoming conference, NCRC conference, on the future of work. So those folks who are interested in this topic, please join that conversation. And we'll talk a lot about what it is we need to do for reskilling purposes and really focusing on adult education, particularly adult learning techniques, and getting people geared up much more quickly than we do in the community college setting. We really have to change how we do business on that side. But and these are all kinds of innovations that we need to force now. Whether we do it for the moonshot or we do it for other reasons, the workforce development system has to change. So I think we will find that there's a groundswell to do that. And there's new technology out there that makes it attractive. So lumber, we know what the problem is, right? We're at 3 times what we should be for oriented strand board. I mean, 3 times the price. The average cost to build a home has gone up roughly $15,000 just for lumber costs. And if you're building affordably, that's about 10% of your total cost right there. And so you got appliance delays. It takes 3 months or longer, sometimes 4 months to get your appliances now. Capital costs, even at low interest rates, they build up. So, the other thing is we really haven't focused on technology in this industry. It's a the industry that's highly resistant to change. But I think change is going to have to come. Change is definitely going to have to come for the industry in the next 10 years because it's just not sustainable. If you can't have some labor saving devices, and I'm a labor lawyer by trade, union side. So if I'm saying this, it has to happen. I mean, we need some labor saving approaches to building in this industry. So whether we do it manufacturer modular or we come up with new ways to use technology on the job site, it's got to happen. What else have we got here? Landing infrastructure.
The other
Go ahead.
issue I would throw out, and I know it's a problem, and it's nothing that necessarily, I think it's folks on the line would understand, is the AD&C lending has become really problematic for the builders, developers.
Explain AD&C lending.
Right, acquisition, development, and construction, and
Right.
It has become a real problem. And there doesn't seem to be a whole lot of bending by federal regulators. That's another area that I think that the policymakers need to look into is reducing some of the restrictions on banks to make loans because it is keeping the supply down.
Yeah, and then the mortgage folks will understand too that the risk weighting that the banks are required to have on this kind of lending is disproportionately high. So they don't want to make those loans. And really, over the last 20 years, ADC lending has declined precipitously. So if we want to build, we need to free up. And I mean, what better time with low interest in the marketplace to do this? It's the same thing is true with mortgages. What better time for people to buy a house than now? My God. I mean, so, okay, so let's move on if you don't mind. I mean, you got zoning issues. We've talked about that a bit. Clearly, that's got to be a focus going forward. So uh, our view on this is if you don't think big, it won't happen. And it's okay. In fact, it's more than okay to call for building and doing big things in this country again. I think if we do it, or something like the moonshot idea, we give ourselves a sense of what it is to be an American, frankly, and what the American dream still stands for. I know that sounds corny. I don't know of any other way to say it. But if you really want to see people can stay connected to this country and have hope for their future and their children's future, we got to start with housing. We got to start with home ownership. That's my view. So I thank everybody for listening. Happy to take any questions.
Thank you so much, Ed. And that's a reminder for our attendees. Any questions, comments you have for Ed or Kirk, or ideas you kind of want their take on, feel free to drop those in the chat or Q&A boxes. Got a couple lined up here. Have you guys seen any stats out there kind of prognosticating on how getting out of the pandemic will impact construction from a supply cost standpoint, or helping shore up maybe some of the labor shortages that builder workforces are currently facing, towards kind of putting a dent in the overall supply shortage that we're currently seeing?
You want to take that, Kirk? You want me to?
Well, I was wondering what your real life experience is. What are you finding
Well,
when you're trying to build these homes?
Well, so that's a great, I mean, construction was considered essential during the pandemic in all but one state, Pennsylvania. So we were able to continue. Now, there was disruption, no question about it. And some of our crews, we did unfortunately have folks fall ill. And of course, that's disruptive and very painful for the people who have to go through it. But it wasn't the labor shortage that was the issue. Certainly material shortages and supplies were a problem. But we built, as an example, we built 20 homes in Columbus, Ohio on a community land trust project there in the middle of the pandemic, and we got it all done in 8 months. We came in 5 weeks early and $20,000 under budget on each house. So, I mean, it can be done. And now the issue is, well, coming out of the pandemic, I think lumber prices will come down. I think that's one of the benefits of coming out of the pandemic, because I think the mills were not fully staffed. You had the tariff costs from Canada that were affecting it. I do think lumber costs will come down. I think labor shortages are here for a while. I do know that the administration put a lot of money into workforce development, but that's not an overnight problem. That's not solved overnight. That's a multi-year effort it'll take the full decade to really bring that up. Materials from China, we're still dependent on appliances that come from China. They're back and running, but the shipping lanes are clogged, as you guys saw with the Suez Canal not too long ago. I just, we seem to be having trouble with the shipping side, and I don't know when that gets cleared up. I hope soon. So, I mean, some things are good come out of the pandemic. I think lower costs a bit, but I think some other things are going to take, 5 years or longer to really work itself out.
And Tom, on kind of a related, it's too early to know, but has the work from home change, will it have positive effects, and actually that people may leave crowded areas, move out to other areas, and that way free up some space that right now is in some of these cities? Might we see office buildings that aren't going to be used anymore? Might they be converted to affordable housing? So, but again, I think as Ed was saying, these are really long-term issues. These are not going to be solved between 2021, 22.
Yeah, and one other thing I'll say, I think, before the pandemic, we saw the beginning of people leaving cities and moving to suburbs. The pandemic essentially made everybody crave a front door. So they don't want to live in vertical buildings. They want to have their own home, and they want to live in a place where they can bring kids up And so this exodus from cities to suburbs, I think, is going to continue, at least for the foreseeable future.
No, great points. I mean, we've seen that just for an uptick in interest on obviously the renovation side as people kind of continue to reinvent how they use their homes as dual purposed for work as well as daycare for children. And with soaring home prices, it almost adds to the motivation to build up instead of buying up.
Yeah, some of the best investments have been Home Depot and Lowe's. Those stocks did very well during these difficult times.
Yeah.
Great points. Another question here: have regulations at a state level also been a contributing depressant towards more affordable housing initiatives being able to take flight and kind of dent the supply gap?
Well, we've seen certainly, I think that they've made it more difficult, but we're also seeing some progress. For example, the state of Oregon did kind of what Minneapolis did. They've essentially said almost everywhere in the state, except for a few spots, you can no longer have a single family zoning only there. So it opens up the possibility for multifamily, duplexes, triplexes, quadplexes to be built in neighborhoods and really increase the density that we're seeing. So there are some very positive, hopeful signs, I think. Ed and I've talked a lot about in the past, the accessory dwelling units. You're seeing states and local jurisdictions saying it's okay to have another site, another structure on your home. It could be a converted garage. It could be something in the backyard. And that will increase the units.
Yep. Yeah. I think it's going to take a lot of those things. We're going to have to be really creative about how we do it, but we have to be relentless about it. And we have to demand better than we're getting out of state and local government, as well as at the federal level. And, it's funny because I approached Jerry Howard, who's the head of the home builders, a couple of years ago when we were talking about this coalition. I said, look, we agree on 90% of things. Why aren't we working together on this stuff? Community advocates working alongside home builders, right? What a concept. But it's starting to work. I just think we're still a long way off. And somebody has to articulate an actual number in order for us to get there. I don't think we're going to do it just kind of lurching our way there.
I agree. And so I've got one more question for you guys, but quick couple plugs here. As Ed mentioned earlier, the Just Economy 2021 conference coming up next Wednesday and Thursday, May 3rd and the 4th. I do have a link in the chat if you'd like to take a look for some more information on that.
Love to have you. And it goes all the way to the end of the following week.
Oh, even better.
Yeah.
And then also I want a quick plug for Kurt, who puts together a bi-weekly video podcast from ArchMI called the Policy Cast. Kind of great way to keep mortgage and housing professionals really up to date on kind of future policy initiatives that are taking
Tom,
shape.
if I can say, the most recent guest was Jerry Howard at the National Association of Home Builders, and we touched on this very issue, the real difficult challenges that the builders have to meet the demand.
Yeah, so link in there for the Policy Cast site. Great opportunity to check out some more compelling content that Kurt led, really central to this issue that's going to be gripping us for a while. So you guys, you touched on it a little bit earlier, but I think it's a perfect opportunity to reiterate. What can a mid-market lender, I think of a typical mortgage collaborative lender, do on their end to help support more affordable lending efforts, whether it's on the advocacy side or through their affiliations organizationally?
Ed, why don't you take that?
Well, I mean, Kirk and I both work on this. Join AHC, the Affordable Homeownership Coalition. I mean, because we're finding a bunch of like-minded folks, industry, community, banking, et cetera, that come together in that space, and we get a chance to sort of share ideas, notes, and connect folks to the kind of advocacy that's going on in local communities. And then I would say simply, and NCRC, I didn't say what NCRC was, and you asked me to do it, and I didn't do it. But we're a coalition of nonprofit organizations from around the country, about 700 of them. And we really were formed to fight redlining and in support of the Community Reinvestment Act. The organizations we have are hungry for these kinds of partnerships. So if you have somebody who's willing to, lock arms or at least have a conversation with local community organizations about what they can be doing to help move the needle on this, we're happy to help broker that. So those are my thoughts. Kirk?
No, I think that says it all. Get involved, get involved with your local that Mortgage Bankers Association. Make sure that they're advocating at their local level and at their state level. And we know the MBA is advocating for this, but make sure that they're active and they're spending the time to talk to their legislators and tell them the story of why we need more homes. There's really nothing better than the personal stories. It's great for people in Washington to talk to legislators, but there's nothing like the local businessmen sitting and explaining the issues to their local representatives.
I think it's a perfect way to close here. So Kirk, Ed, I really appreciate the time, the discussion, the information. Obviously, there's a lot of different steps we can take out there, but it's going to, as you guys eloquently put it, really a massive collective effort over the long haul and relentless from really all parties involved to help push affordable housing and this supply inventory gap forward. So as always, I thank you both for the time and really appreciate the insights today and look forward to sharing with our attendees recording information as well as a copy of the deck and the follow-up.
Great. We look forward to continuing to work with the Mortgage Collaborative. Thanks, Tom.
Thank you very much.